If you guys have ever been in a trade and you just get absolutely smoked in the matter of 1 second with a massive move against you, more than likely you were a victim to news. So today I'm going to be talking about how to know when news is coming, what type of news to watch out for, and how you can actually use it to your advantage so that you stop getting smoked by random massive moves the second you aren't expecting them. So to get right into it, the first thing is identifying when you want to be watching out for news. And it's very simple. The thing I like to do is go to forexfactory.com. It's a free website. You don't have to pay for anything. And you can see right here any bit of news with the red folder. And this is all on their main menu. You don't have to go to anything to find this. It'll just be right here. Now, anything with a red folder, you need to take note of it, and most likely you do not want to be in a trade the second that drops, unless you're talking about like a long-term swing trade. But if you're using my STIM model, you do not want to be in a trade when we get red folder news releasing. The red folder is basically just signifying high impact news that's likely to cause significant volatility. I would say the main things you want to watch out for if you're trading ES and NQ, which is what I trade, are things like the USD red folders, because those are red folder pieces of news that are going to very much affect our country, our economy, things like that. The types of news that you're going to see with red folders are things like CPI and PPI, which is like consumer and producer monthly inflation metrics, right? Very important broad scale economic consequence things. You're going to see things like unemployment numbers. Now we're going to get into one of my favorite concepts, which is how to use this news to your advantage. Because like I said, a lot of traders will get killed because they're in a trade when the news comes out. But if you actually learn to leverage this news in your favor, it can be one of the most profitable things that can be really helpful for your overall trading performance. So the concept I'm going to talk about in terms of how to leverage the news in your favor is that of a data wick. Okay, so a data wick is basically the wick that gets formed on either side of a 1 minute candle the minute a big red folder piece of news is released that doesn't get touched, okay? And it's going to act as a draw on liquidity. So right here, we have a very good example of the CPI news from June. And I'll be clear, there's examples of this data wick theory working out pretty much every time there's red folder news, but this is just the most clear and visually appealing example of it for the sake of this video. But you guys can look, even forward test in the future, use data wicks, untapped ones as a target on liquidity, especially to the upside in this uptrend, and you'll see what happens. But we have something like this, right, where we can map out this wick right here, and we can map out the bottom wick right here, okay? So the thing about this is that these are both going to act as a draw on liquidity. So you can see that when the news comes out right at 8:30 a.m., we have this massive move up. Now we leave this wick untouched, okay, and we have this move down. Now what happens? We immediately move back up and take out this data wick. Now, on the opposite end of that spectrum, that means that we no longer have to worry about this top range as a draw on liquidity. We can now actually focus on taking out the bottom wick. That's a very important part of this. Once one of them is taken, if the other's open, that one becomes the draw on liquidity, okay? And so as we can see, this wick got taken right afterwards. So we now expect, at least in the short term, which is all we care about most of the time when you're trading the STIM model, we expect price to draw to the downside and take out that second data wick. Now, what was even better about this was that it was an exact equal low with the wick before, but even if that isn't the case, you're still going to get good examples of this working out. And as you can see, once we took out that top wick, we make a super clean move right to the bottom of this range, and look, we take out the data wick. And you guys also remember how I've talked about once you take out a draw on liquidity, it often becomes a point for reversal. Well, as you can see, look what we get. We take out this data wick. We get a very textbook looking inversion here to the upside, and look what happens. We end up making a very strong move up that anybody would have been able to capitalize and make a profit on had they taken a trade like this. So it's very important to realize that data wicks are a good draw on liquidity, okay? So I'm kind of just going to illustrate it for you one more time so that people can get the idea. So say we have a news candle like this, right? It comes out at 8:30 a.m. It could be about whatever. It could be CPI, unemployment, whatever. And we leave a massive wick on the top of this candle, okay? Well, what's going to happen a lot of times is that wick by the time this candle closes is going to be really far away from where we actually are by the time even the 1 minute candle closes, right? The candle could peak up there for 1 second because the buying pressure was so intense the second this news came out. And then it starts to cool off immediately after, and maybe you'll get a red candle to follow or something like that. And we'll just make this one green for the simplicity of this example. So you have a data wick, right? We have just this euphoric push up. We leave a ton of unfilled orders up here. And the minute the news comes out, obviously everything's euphoric, even the first 5 seconds, you look on the 1 minute chart. But after a little bit of time, we start making maybe a retrace into the consequent encroachment of this candle. And that's when you can really start to look for a long up to this data wick, right? Because like I said, the data wick is the draw on liquidity. The bigger the wick, the better, the more obvious, but it has to be on the 1 minute chart, okay? You have to look on the 1 minute chart. That's where you're going to find the best data wicks. That's where you're going to find the only valid data wicks, okay? And that's what you want to be using as a target if you're getting good setups to the opposite side, especially if you have other confluences in your favor. Like, say we had something like this 1 minute candle, right? And then 10, 15 minutes later, we've traded back down into it. We've created a bullish 5 minute fair value gap here. Then that's even extra confluence to say, okay, I'm going to start taking longs here once we get a move back up to the upside, maybe use the inversion model, and boom, you're probably going to hit that target. It's a very reliable way to take a trade. Data wick is a great draw on liquidity. And like I said, a lot of times you're going to leave amazing wicks and not take them out the second after because the initial 5-10 second push up was so euphoric. But even by the end of the 1 minute candle formation, we've probably come back down a lot in many of these cases. So that's exactly what a data wick is. You can back test it, you can forward test it, you can mark out every piece of red folder USD news on your Forex Factory and see what happens and how we react with the 1 minute wicks that are formed the second the news drops. And I guarantee you guys, you'll be happy to see the results of how consistent of a draw on liquidity they are. And like I said, news is something that can absolutely smoke you when you're taking a trade. It can absolutely destroy your trade. It can destroy your account. You can blow a funded. You can blow a combine. But if you use your head, check Forex Factory like a responsible person and adapt to the environment, right? So don't take a trade the minute this news is about to come out if it's a red folder. All that type of stuff. You can actually really use the news to your advantage, right? So many people get smoked every time red folder news comes out. You do not have to be one of them. You can be one of the people that waits for the move, waits for the reaction, and then uses that data wick or whatever new information we've gotten out of that news to completely frame your next trade and give yourself a leg up over most of the people who've already liquidated their accounts trying to gamble the red folder or just completely oblivious to the fact we were going to get red folder. So with that all being said, if you're still watching this video, you're probably serious about trading. And if that's the case, make sure to like and subscribe. I post educational content to help you guys get better all the time. And I'd appreciate support. Also, make sure to join my free Discord linked in my YouTube bio if you want to trade with me live. I go live on there sometimes, answer your questions, post my trades. All of that completely free. No credit card, no email, none of that BS. Just click the link and you're in. It's that simple. And join my community and also be alerted whenever I drop a video or even give me some ideas for videos you'd want to see. This video I just made was actually an idea that several members pitched to me as something they wanted to see, and look at me here, I'm producing for them. So with that being said, I appreciate you all for watching. I'll catch you in the next one. Peace.